This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon. A happy Monday, everybody. A very busy Monday. Carol Massar, along with Bailey Lipschultz. Tim is off this week, and we got a lot going on. It's October 13th, Monday. God, you got stocks higher on all of this.
Way higher after a big sell-off on Friday, so buying the dip seeming to work again for another session.
Good point, right? To see that investors come back in. So what's going on? We've got another AI-related deal involving OpenAI. We've got the U.S. and China. Bailey, it seems like not so good on Friday, right? But over the weekend, it feels like there was some movement that maybe these trade talks are continuing.
Seeming to walk back via True Social yet again, surprise, surprise. But to your point, we're seeing critical minerals rallying and rare earth stocks rallying. So a lot of excitement, or at least maybe a sigh of relief on this Monday.
Exactly. All right. So we're going to try and tackle all of this. I do feel like they're big, big, big issues. So we're going to get into the latest on that ceasefire deal between Israel and Hamas. At the same time, I'm sure you've been watching OpenAI and Broadcom today.
Yeah, what you need to know about that, stocks rallying, as you mentioned, chip stocks rallying. Broadcom, last time I checked, was up, I think, about 10%. So best day in quite some time.
Having a good day.
For one of the biggest stocks in the world, mind you. And also, we've got a double dose of the view from the C-suite following earnings. On the industrial sector, Daniel Florness, CEO of Fastenal. And on the retail and consumer, Harmit Singh, CFO and growth officer at Levi Strauss. I don't know, are you a big Levi fan?
I love Levi's. I've gone back to buying them, right? Like, I love them. I love them. And I think what's interesting, let's not forget, I forget what day it is, right? Government shutdown. But here we are. It continues going on longer than many thought. And so what these CEOs have to say about the environment, I think, is really important when we are kind of data deficient, courtesy of the government shutdown.
Sitting in that data vacuum, if you will. But at least we get big bank earnings in the next few days.
We do get big bank earnings. All right, get ready, everybody. It's going to be a busy week. First up, though, let's get a check on the trade and your top business stories. Let's turn things over to Amy Morris in for Charlie Pellet.
All right, thank you, Carol. Wall Street traders drove stocks toward their best session since May. The U.S. and China signaling that willingness to keep trade negotiations alive. We check markets for you all day long here at Bloomberg. The S&P 500 up 1.6%. NASDAQ up more than 2%. The Dow up 1.25%. The 10-year Treasury, bond markets are closed for the holiday. OpenAI signed a multi-year agreement with Broadcom to collaborate on custom chips and networking equipment, marking the latest step in the AI startup's ambitious plan to add computing infrastructure. The hardware rollout should be completed by the end of 2029. That's according to the companies, with Broadcom shares now 10% higher. Disney shares 1% higher. Taylor Swift says she'll have new content that will premiere on Disney Plus in December. That's according to a post on X. The Eras Tour, the final show, a 6-episode behind-the-scenes docuseries, will premiere December 12th on Disney Plus. Warner Brothers Discovery shares are more than 4.5% higher as the media company reportedly rejected Paramount Skydance initial takeover approach for being too low. Sources tell Bloomberg that Paramount has several options in its pursuit of Warner Brothers. The government shutdown is leaving investors desperate for a fresh read on the economy. Banks are seen as uniquely positioned to fill in some of those information gaps. JP Morgan, Goldman Sachs, and Citigroup all set to report third quarter earnings tomorrow. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Bailey Lipschultz.
All right, so appreciate it. Of course, Amy Morris in there for Charlie Pellet. Hey, President Trump called for the historic dawn of a new Middle East in an address to the Israeli parliament. That was earlier today as he visits the region to celebrate a deal halting the war in Gaza and securing the release of prisoners held by Hamas. That has happened. Now, the president just left Egypt after meeting with leaders from across the world to celebrate that deal that could bring an end to a devastating 2-year war that destroyed much of Gaza, and inflamed tensions across the region.
This is the day that people across the region and around the world have been working, striving, hoping, and praying for. They have done things over the last month that I think were really unthinkable. Nobody thought this could happen. With the historic agreement we've just signed, those prayers of millions have finally been answered.
And that, of course, was President Trump earlier from Egypt. For more, we head to Israel and Jerusalem and to Bloomberg's Oliver Crook. He is Bloomberg News correspondent. Oliver, hard not to feel like after a really difficult 2 years that this isn't somewhat historic. At the same time, we know that there is still much to be done to work out. First off today, talk about the significance of what has happened on this Monday, October 13th.
Carol, I think the difficulty is joining these two ideas, the sort of close of the first chapter of what has been a horrific 2 years, obviously for the Israelis beginning on October 7th and then ensuingly within the Gaza Strip for the last 2 years, where, as you say, almost 70,000 people have been killed, the majority of which women and children, and that sort of devastation that has just been ripped through the Gaza Strip that came to a close and came to a silence on Friday night, and really trying to usher in this moment of peace. And we should say we started the day today, Carol, with 20 hostages alive, still held by Hamas. They have now been repatriated to Israel. We have begun the prisoner swap, the prisoners being released from the Israeli side into the West Bank, into Gaza. Almost 2,000 of those will be released in the first phase of this plan. And I think that it is fair to say, and I think Donald Trump is fair to claim the kind of credit that he is claiming, and even the greatest critics of Trump, I think, today would say that it's his sort of unconventional foreign policy and unorthodox approach that really made this happen. It's hard to imagine the traditional levers of foreign policy being able to bring this deal into being. That being said, as that one chapter closes, that sweet chapter sort of closes, it sort of masks the complexity and the bitter complexity of the next chapter that now is open, the one that began in Egypt today with the President of the United States convening all of these leaders from across the world, many from Arab states. We should say that the sort of four leaders that were put in the prominence in that main hall were the Turkish leader, obviously Trump, leader of Egypt, and the leader of Qatar. Those are seen as kind of the sort of foundational members of this agreement that has been worked out over the last couple of weeks, and that really materialized very quickly over the last week. But again, it does very little to explain some of the difficulties that still lie ahead, the difficulties about how this sort of governance structure is going to work in Gaza with this so-called Board of Peace overseeing it, who's going to participate in that, the question of security forces within the Gaza Strip, a security apparatus that is both legitimate to the Israelis and to the Palestinians. And of course, I think the most immediate question, what is the future of Hamas? This is a question that is still fundamentally unanswered. And the Israeli war aims have been twofold since the very beginning. The return of the hostages, that was accomplished today, and the dismantling or destruction of Hamas, that has not yet been finished. So when you ask a very simple question at the end of this day, is the war over? The answer is not necessarily yes, depending on who you ask. To Donald Trump, it is absolutely over. Ask Benjamin Netanyahu, you may not get the same answer.
And Oliver, you mentioned President Donald Trump. What was the reception like for him today? As you mentioned, traditional means likely wouldn't have resulted in where we are today.
It was a hero's welcome. I mean, even as before you touched down in Israel, as I was arriving a couple of days ago, you could see one of the skyscrapers in Tel Aviv looking out the window with an Israeli flag and an American flag, and underneath it said, "Thank you." And once you land, you get into the airport. There are still the posters of the hostages that have been there since the beginning of the attack. You take the highway from Tel Aviv here to Jerusalem, which is the same route that the president took today. These are highways that are lined with Israeli flags ordinarily. Since Friday night, every third flag is an American flag, and that is exactly the reception that Donald Trump got here in Israel. Speaking before the Knesset, I think that the sort of hyperbole reached its sort of vaulting height when the Speaker of the Knesset said that you will be remembered, Donald Trump, not just as an American president, but you will be remembered as a giant in Jewish history, and you will be remembered for thousands of years to come. That is what he was told. And again, that has been sort of broadly speaking, it's, I think, fair to say that Trump is certainly the most popular politician in Israel, and probably at this moment the most popular person in Israel.
What about Prime Minister Benjamin Netanyahu? Not so popular?
Well, he's actually gained a little bit of support in the polls after this deal was sort of struck. But again, you're speaking to sort of one of the main issues. I mean, we can go all the way back to before October 7th, when there were literally hundreds of thousands of people in the streets, huge divisions within Israeli society, trying to get Benjamin Netanyahu to call elections, to step down, all of those sorts of things. Then October the 7th happened. This sort of war government was assembled. But there's still a lot of questions about what comes next for the Israeli government himself and for Prime Minister Benjamin Netanyahu. If you go by the election schedule, the next election is going to be in October. But again, you have the sort of constituents of the Israeli government currently that are being held up largely by the sort of far right wing of Israeli politics, by the ministers Smotrich and Ben-Gvir, who, by the way, did not pull out their support of the government in order to bring it to collapse for this deal, but they did not vote for this deal. They did not support this deal. They are people who more than likely would like to continue to prosecute this war further and further. So there's still these disagreements that exist. And we should say in Hostage Square, when we had Steve Witkoff speaking a couple of days ago alongside Jared Kushner and Ivanka Trump, every time Trump's name came up, massive applause, massive cheering in the literally 100,000 people that were watching it. However, when Benjamin Netanyahu's name came up, massive booing across that crowd.
Right.
We should say that that is a crowd that is more traditionally hostile to Benjamin Netanyahu. That is not the universal feeling, but there's a lot of complexity under the surface in these Israeli politics.
There's been a lot of complexity throughout the last 2 years, certainly with this. Oliver, so good to check in with you. I know we'll be checking in with you once again next hour for any updates on this. That is Oliver Crook. He is correspondent for Bloomberg News there in Jerusalem. All right, we want to stay on this story. Joining us right now is Mona Yacoubian. She is Director and Senior Advisor, Middle East Program at the Center for Strategic and International Studies. She joins us from Washington, D.C. Mona, should President Trump be taking a victory lap here?
I think the president does deserve to take a victory lap, considering what has been accomplished today. The release of the last 20 remaining hostages who were alive, are alive in Gaza. The cessation of hostilities for now, the flowing in of much needed assistance into Gaza. These are important milestones. However, I think the president is perhaps premature in saying the war is over. The difficult steps ahead are the ones that we will have to watch closely to see if, in fact, his aspirations become reality.
And Mona, how does that play out if you were going to say that this is presumably some form of a stopgap and not necessarily a conclusion and marking a next chapter? What plays out? How does this play out? And kind of what's your view on that?
Well, what will distinguish what happened today from ceasefires in the past is if the various points that are laid down in President Trump's 20-point plan are in fact implemented. Critical among them is the disarming of Hamas. Hard to know how exactly that's going to happen. The agreement itself is very short on details. There's also the envisioning of an international stabilization force that would surge into Gaza and be responsible for security. Not at all clear how that's going to happen. And of course, questions around governance and the constituting of a committee of Palestinian technocrats to be overseen by former British Prime Minister Tony Blair. I mean, there are so many details that have yet to be ironed out, let alone implemented. And I think these are the key potential sticking points in the coming days and weeks and likely months.
Mona, and I think it's fair to say, right, a conflict like this that has gone on not just in the last 2 years of a war, but it's been going on for a long time between Israel and Gaza and Hamas. What is Hamas, though, in a world where there is no conflict between Hamas and Israel? I mean, they have been designated a terrorist group. So I'm just curious, what is Hamas potentially going forward in if there's real peace in this region?
Well, I think you point to a really important issue here. I mean, Hamas's raison d'etre is resistance against Israel and against Israeli occupation. Now, presumably, if all of the various elements that would bring actual peace between Israelis and Palestinians come into fruition, then that would indeed sort of, I think, dramatically undermine the rationale for Hamas to continue to exist. But I do think it's really important, Carol, to note this agreement talks about and calls for the disarming of Hamas. It does not call for the destruction of Hamas as Prime Minister Netanyahu has called for and made a centerpiece of his policies on Gaza.
So, okay, so that's an important distinction, correct?
Very much so. I mean, we're already seeing reporting that as Israeli troops withdraw from limited areas of Gaza, there is reporting that Hamas is filling in and is taking over. And so, again, this just gives you a sense of how daunting this challenge is going to be going forward.
And Mona, you have more than 30 years of experience in the Middle East and North Africa. With that in mind, what do the next weeks and months, years look like?
Well, I think immediately what's going to need to happen is more meat on the bones of exactly how it is that this agreement that all of these various leaders just signed off on in Sharm el-Sheikh, how will those points actually be implemented? So I think the first order of the day is going to be figuring out how to establish security on the ground as Israeli troops withdraw. And not at all clear how that's going to happen. What are the mechanisms by which Hamas is going to be disarmed, and to whom? Whom will they give their arms to? And then, of course, the other key element of any post-conflict stabilization is governance. You've got to have governance. You've got to have authorities on the ground. Who will they be? How will that structure be set up? Those are really critical questions, and we're a long ways from understanding what the details are that will govern those various arrangements.
Does a disarmed Hamas, just to kind of tie this up, do they want a Gaza, a Palestinian state that actually thrives?
Presumably, they have called and would be in agreement with that. But as always, the devil is in the details. For example, they are saying that Israel must withdraw 100% from Gaza. That is not envisioned by the plan. And ultimately, what does a Palestinian state look like? Is there a way to actually build a Palestinian state from the current set of circumstances that we see on the ground? That is also going to be extraordinarily difficult. As long as these questions remain, there will be space for resistance. There will be space for groups like Hamas or its successor to cause trouble.
Yeah, it's fascinating, right? And you talk about, the building of a Palestinian state, and then there's just the actual build of a land that has just been devastated. So much more to come, and I know we'll lean on you in the future because I'm sure there'll be more to come. Mona Yacoubian, she's Director and Senior Advisor, Middle East Program at the Center for Strategic and International Studies. Hey, in just a moment, we're going to talk a little bit about earnings, Bailey, because we've got Fastenal. They reported this morning, and the stock's been under some pressure.
Yeah, been under some pressure, and this is a big bellwether when we look at the industrial space. So one of the first out of the gate, down more than 5%. Disappointing so far.
Yeah, curious to see what the CEO is going to say, who will join us in just a moment. And then we're going to get into what you need to know about OpenAI's latest deal. First up, though, let's get a check on the trade once again on this Monday in your top business stories. Here again, Amy Morris in for Charlie Pellet.
Thank you so much, Carol. Stocks are recouping some of those losses after President Trump and senior officials backpedaled on tariff threats against China, signaling a willingness to negotiate. We check those markets for you all day long here at Bloomberg. The S&P 500 now up 1.6%, NASDAQ up 2.2%, and the Dow up 1.4%. And the dash for gold is persistent. Gold futures now 3% higher. Bond markets are closed for the holiday. OpenAI signed a multi-year agreement with Broadcom to collaborate on custom chips and networking equipment, marking the latest step in the AI startup's ambitious plans to add computing infrastructure. Broadcom shares now 10% higher. Bank earnings also in focus this week. JP Morgan, Goldman Sachs, and Citigroup all set to report their third quarter earnings tomorrow. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Businessweek Daily with Carol Massar and Bailey Lipschultz.
All right, so appreciate it. Amy Morris in there for Charlie Pellet. Well, big AI is a big market story as well today. Once again, driving the trade, pushing semi as a group, semiconductors that is, higher today, led by Broadcom, whose stock jumped after OpenAI agreed to buy the company's custom chips and networking equipment in a multi-year deal, part of an ambitious plan by the startup to add AI infrastructure. So we wanted to just dig a little bit deeper into it. Amy talked about it. We certainly are seeing it playing out in the market. Got a great voice, though, Bailey, to walk us through it.
One of my favorite people, I will say.
Bailey must have said Mandeep's name about 5 times on the call this morning.
Immediately. Was like, we need to get him in studio. So perfect timing. And that's why we're joined now by Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, here in the studio. Mandeep, Walk us through this deal, because it feels like every other day OpenAI has a new agreement with some chip manufacturer and the terms are slightly different, whether it's an ownership stake or front buying chips. What's up with this Broadcom Pact?
I mean, they are really going after, data center capacity right now. And the way they are doing it is by diversifying their supplier base. So it's not just relying on NVIDIA, which everyone does right now for compute, but really leveraging Broadcom, which is a custom silicon maker. So think about, NVIDIA giving you a generic chip where you can run your AI workloads, whether it's training or inferencing. Custom silicon is used just for the specific workload that OpenAI has to run for its proprietary model. So no one else has any benefit of using a custom silicon because OpenAI is not looking to sell its own chips to compete with NVIDIA. It's looking to use its chips for its own ChatGPT app or any other custom app that it has developed in-house. And Google is a prime example of what a custom silicon looks like because they have their own TPUs, which when you compare it to NVIDIA GPUs is more customized in nature, but it does a terrific job of running YouTube or any other AI workloads that Google wants to run on its chips. So that's what OpenAI is doing. And it has a tremendous cost advantage because it costs a lot lower than the NVIDIA price tag of $30,000 on an average for a GPU.
TPU, tensor processing unit. I just want to make sure I understand. Yeah. What's interesting, though, is I do feel like there's this trend to get chips that maybe don't cost as much, maybe don't use as much power, but do exactly what we need. Is that fair?
Yeah, I mean, look, 1 gigawatt requires up to 500 to 600,000 accelerator chips. So we're talking 0.5 to 0.6 million chips for 1 gigawatt data center.
Yeah.
Imagine if you can save up to $5,000, how it multiplies, in terms of cost savings. The real constraint right now is power. It's not as if you get a cheaper chip and you are all good. You still need the performance per watt, which is why NVIDIA is so good, because it gives you 5 to 10x more performance per watt than the nearest competitor.
You do it, right?
Exactly.
I want to show, there's a graphic, and one of our producers made it, Elizabeth Cedrin, and I think, we've all been looking at this. It's about OpenAI and all of the companies that they're doing deals with, and it's not even been a month, but they have done deals with NVIDIA, Oracle, CoreWeave, AMD, now Broadcom. And again, it's just late September to mid-October. So is that what this is just giving them a smarter supply chain and having access to what they need? Is it as simple as that?
Well, it's not as simple because they're going across the stacks. Think of, how AI applications are deployed. You need the chip, you need the infrastructure, you need the cloud, because that's where you're doing your inferencing. So they've cut deals with different parts of the stack here, not just the chip makers, not just the power guys, also the cloud guys. So from that perspective,
like CoreWeave, right?
CoreWeave, exactly. And look, to my mind, they are going aggressive in terms of adding more capacity than they probably need, because they think if they get market share, they get the companies or users to use their product, then they will be able to monetize and probably drive some companies out of competing with them because of the scale involved here.
Well, are XAI and Anthropic striking similar deals, or is this the OpenAI show?
I think right now XAI must be thinking, and they are doing a $20 billion deal with some private financing. But look, when OpenAI announces a 10 gigawatt deal, we're talking 500 billion, not 20 billion anymore. So the numbers are getting bigger and bigger.
Well, is OpenAI in this moment in time on October 13th the most important company in the world?
Well, when I look at Mag 7, your Broadcom is not in Mag 7. It's a $1.6 trillion company. OpenAI probably, it's one of the...
And they're up 10% because of this. I mean, also, the whole space sold off on Friday, so I don't want to downplay that too much, but like...
They're not even public. They're not even profitable as much as we know, right?
Yeah. No, I mean, look,
OpenAI.
So right now, their gross margins would be negative if you factor in the training costs. Inferencing-wise, yes, they are making some money. But clearly, if you include everything, and just to compare it with Google, Google has an annual cost of revenue of around 100 billion. That powers all of their apps, Google, YouTube, everything that they run. OpenAI's compute costs are probably north of 20 billion right now. And if they're adding 26 gigawatt more capacity, we are talking, compute costs to multiply at least 25-fold. So from that perspective, you have to ask yourself, how much incremental revenue do you want to see from OpenAI to justify this, $1 trillion, potentially $1 trillion in compute infrastructure spend? And that's where Google's infrastructure is so efficient, because just, less than 5 gigawatt of compute gets you to over 400 billion in revenue.
That's pretty cool, to say the least, in a non-financial analysis terminology. Mandeep, thank you. Always a gem. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. AI spend and the build out is one read on the U.S. economy and certainly the tech economy. Now to another great read, Bailey, on U.S. economic activity. And we're talking about the industrial supplier Fastenal, which reported earnings earlier this morning, and shares, I think they were the worst performing in the S&P 500 at one point.
Yeah, right now down about 6%. And keep in mind, this is a $50 billion company. So this is no small fish in the industrial space. One of the first reads we get every quarterly earnings season. Missing Wall Street views, broadly speaking. So interesting what's driving that.
Well, let's ask the CEO, Daniel Florness, is with us. He is Chief Executive Officer of Fastenal. He joins us from Winona, Minnesota. Dan, it is great to have you back with us. Talk to us about the quarter, because it does seem like analysts were noting that the pricing during the quarter was weaker than expected and marks the second straight quarter of softer pricing. And maybe that's why we're seeing the stock down. What do you want to say to investors?
Well, part of the reason our stock's down is it's priced to perfection. If you look at what it's done, year to date and where the multiple has gone. But, we had a really good quarter. We had a double-digit quarter. We hadn't seen that for a couple years. Double-digit growth, sorry. And pleased with the outcome. One of the challenges we had this year was there's a lot of fluidity around tariffs and what it means for pricing. And we will raise price to address costs in our customer's supply chain. We really don't want to raise more than that, because we believe it impairs our ability to grow as fast as we'd like. And coming into the quarter, we estimated X for impact of pricing, came in a little bit less. We lowered our number for the fourth quarter. But the most important aspect is, on a price cost basis, we are neutral, and that's what we aspire to be. We'd rather just grow.
And Dan, to your point, Fastenal, even with the pullback today, returning 22% year to date, so outperforming the S&P 500 and comparable stocks in the industrial space. But just one more question on pricing in terms of expectations. Would you want to raise pricing? Like, do you get the sense that consumers and customers would push back, just given how you've been shifting into bigger customers spending much more money?
Yeah, customers always push back on pricing. Doesn't matter the size customer. We are having conversations with our customer. We will be doing some price increases in Q4. I suspect we'll be doing some price increases as we move into 2026. But again, our first discussion with the customer, they understand it. They're willing to move on price. Our first discussion is always, what are alternatives to this product that maybe doesn't mean we have to raise your prices 5%. Maybe it means it only has to be 2%, and we'd rather go to 2%, because that's what a supply chain partner does.
Well, Dan, how do tariffs fit into this? Just given that, according to analysts across the street, when we look at certain industries, now is when we're going to see tariffs showing up in the third quarter in guidance as it relates to 2026. What are you seeing, and how are you kind of attacking or addressing any pressures from tariffs?
Yeah, so for us, tariffs have been in the equation since the early part of the second quarter, a little bit of the first quarter. I think in the individual that handles pricing, historically he'll provide us an update once a month. He'd gotten to the point where he was not only providing us updates, he was up to video number 14 as of July that he was serving out to the field, giving them guidance into what we were seeing in our supply chain. And so we've been adding price as we've gone through the year, and these have been discussions with customers. And I hope that answers your question.
No, I think it does. But I think the big thing is, Are you mitigating the impact of tariffs? Are you shifting your supply chain? Is the expectation that you can have some kind of knock-on effect as it relates to pricing if we do continue to see threats from the president going after countries like China or others? We are going to talk to one of the members of Levi's management team, and they called out that they had to dial up their expectations for the impact of tariffs from other countries. So how is that impacting when you look at your supply chain and when you look at the potential for pricing impacts in 2026?
We've been moving supply chain around the planet in earnest since 2017, 2018 timeframe. As our name would imply, we sell a lot of fasteners. And most of the fasteners in North America come from either mainland China or Taiwan. And the automotive industry took the production there back in the 50s and 60s, actually took it to Japan and South Korea, and it migrated from there. If I look at our resources, we now have a sourcing team in Shanghai, but we have a sourcing team in Bangkok. We have a sourcing team in Northern India, and we have worked to diversify our supplier base around the planet and a little bit more in North America, but really around the planet. So to have diversity in supply, so you're not caught off guard by some price change or a tariff change. In addition to that, we've taken supply chains coming in North America, which traditionally came in through the West Coast of the United States, and then we would redistribute from there. We have moved supply chains so they're bringing product directly into the West Coast of Canada or the West Coast of Mexico, because those two countries represent about 14% of our revenue. Now, you bypass the tariff. However, it's more expensive to break shipments down over in Asia and bring them in, but it's a lot less than a tariff.
One of the things I want to ask you, you talk about supply chains. Is the end game, Dan, we're talking with Dan Florness, he's Chief Executive Officer of Fastenal. Is it about, though, largely reducing your exposure to China, which has been a pretty big one?
It's reducing our customers' exposure to any market, in this case, China and or Taiwan, but to any market that are on the receiving end of some of the political winds and create an unstable supply base for our customer. Here it happens to be China. Another month, it might be a different country. Another year, it might be a different country. It's diversifying your supply chain so your eggs are not all in one basket.
Gotta be ready. So
that's for our customer.
Yeah, whichever way the winds blow. Hey, one of the things I want to ask you just big broadly, the earnings update today, you talked about the industrial environment still sluggish. We've heard similar commentary on this persistent sluggishness elsewhere from manufacturers, as well as caution around project delays. At what point does this become something more worrying than just sluggishness?
Well, for us, it's been sluggish since November of 2022.
Okay.
When so we really key on what the Industrial Institute for Supply Management puts out, the PMI index. Mm-hmm. And that's been sub 50, which really plays into our customer base. Other than January and February of this year, that's been sub 50 since November of 2022. So we've been in a sluggish economy for a long time from our perspective. And other than living through the first part of it, where you had customers that were downshifting, reason our growth is shining through in a different way, A, I think we're executing at a higher level, but B, once you get through that downshifting, now you're just, even if your customers are at a subdued level, you can grow in that kind of environment. And that's what's shining through in our numbers right now.
All right, one thing I want to ask you, because as you would imagine, I don't know how much of this is pervasive in your world, but AI is like the nonstop conversation that we are having, certainly when it comes to activity and market impact. To what extent is AI maybe sucking up the oxygen in the economy? Are you seeing any signs of that? Or your world, they're going to still need what you guys supply no matter what's going on with the AI spend and enthusiasm?
Well, first off, we have we have a meaningful improvement in our revenue as it relates to things like data centers, because we sell into a wide range of customer needs and end market needs, whether that is the actual construction. I visited many data centers being built where we have people on site there. After it's built, we're supplying into that facility with things like air handling and maintenance equipment. In the case of customers that sell into that sector, that's actually a strong business for us right now. And then as an organization, we're increasingly making use of AI in our own business and how we go to market and how we help our employees be more efficient in what they do.
And Dan, about 45 seconds here. With keeping in mind data center construction, where are those products sourced from? Are those also heavily sourced from China and exposed to tariffs, or are they different supply chain altogether?
They're mostly a different supply source, but it depends on the component. If it's facility maintenance type products, they're coming from anywhere on the globe, and so they're subject to the same type of issues any product would have. But a lot of the components, I know a lot of the manufacturers that we sell into. I visited one about a year ago in Michigan, where they were purposely avoiding China, and they're selling directly into the data centers.
All right. They're going to yell at me, but 20 seconds. You've been at Fastenal for a long time. You've seen different cycles. How do you describe this one? And again, just got about 20 seconds, if you could be very quick.
Oh, odd in the fact that, similar to what we saw in 18, but odd with the fact of it's just so damn fluid. And there's so many things that occur from week to week, month to month that are outside the norm. But the fundamentals still work.
All right.
Serve your customer at a high level, you grow your business.
Love talking with you, Dan Florness. He's CEO of Fastenal. When we come back, another view of the C-suite. Levi CFO stopping by. We'll talk about retail and the consumer when Bloomberg Businessweek Daily continues.
It's 2:40 on Wall Street. I'm Amy Morris. Wall Street traders lifted stocks as the U.S. and China signaled willingness to keep trade negotiations alive. Middle East tensions cooled while the AI rally powered ahead. We do check markets for you all day long here at Bloomberg. The S&P 500 up 1.6%, NASDAQ up 2.2%, the Dow up 1.3%. Bond markets are closed for the holiday. JP Morgan Chase will funnel $1.5 trillion into industries that bolster U.S. economic security and resiliency over the next 10 years. The campaign will invest in companies and hire bankers and other professionals in sectors such as rare earth minerals, defense, aerospace, and energy technologies. First Brands Group's CEO Patrick James has resigned as the company faces an investigation over its past use of various financing instruments, including allegations that some collateral was pledged more than once and that as much as $2.3 billion has, quote, simply vanished. James will be replaced by Charles Moore as interim CEO. And Beyond Meat tumbled after the plant-based protein producer said nearly all creditors had accepted a debt swap that will lead to a substantial dilution of shareholders. The stock now 45% lower. The shares had already declined 47% this year through Friday. More on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Bailey Lipschultz.
All right, so appreciate it. Amy Morris in there for Charlie Pellet. All right, folks, Levi Strauss shares, they are trading slightly lower today after dropping as much as 14% on Friday. This is after the company's upgraded earnings guidance still fell short of higher investor expectations, following the stock's more than 40% rally heading into that earnings print. Now, one key disappointment, at least according to analysts out on the street, is earnings growth failing to match the pace of sales expansion due to tariff and distribution costs. Meantime, gotta say, Bailey, you did have TD Cowen raising its price target on the stock to 26 from 22 a share, and they've got their buy rating. Yeah,
staying bullish. And you look at the street, 13 analysts, 10 of them buys. So is it a sell the news event, price to perfection? Mm-hmm. We see.
It's a really good point. So let's see what one of the company's members of the C-suite have to say. Harmit Singh is with us, Chief Financial and Growth Officer at Levi Strauss. He joins us from our San Francisco bureau. Harmit, it's so good to have you here with us. How are you, and how is the consumer doing?
Well, thanks for having me, Carol and Bailey. It's great to be here again. We had a real strong quarter, 4 consecutive quarters of high single-digit growth and record gross margins, as well as the fact that we were able to raise our full-year guidance, as well as gross margin and EPS expectations. Overall, as a company, we're a stronger and a higher performing company defined by accelerated growth, expanding margins, and higher return on invested capital. To your question about the consumer, The consumer is largely being resilient. Our products are really well segmented. We have Blue Tab, which is our premium high pinnacle product, and that's doing well. We've introduced that in the U.S. So far, so good. We have a Red Tab product that is basically marketed to consumers who earn between $100,000 and over, and that's based on our results really done well. And then we have a signature product sold through Walmart that again had a banner quarter, and that's for lower income consumers. So consumer strength really strong. That's why we were able to raise the full year guidance, and our product pipeline hasn't been stronger. Now, if you go outside the U.S., our international business was up in the high single digit, and so Asia had a strong quarter, consumer strong. Europe had a decent quarter, consumer in a better place, and so is Latin America.
Well, I'm just going to lay it out for you. I think I bought my first pair of Levi's in a long time, just a couple of months ago. And my daughter, who's 22, so much younger than me, has been buying Levi's for a while. So, Bailey, I mean, they're back. I go into the store in downtown in the Village, and yeah, it's packed.
Well, you get a partnership with Beyonce, all the marketing you guys are spending in terms of targeting both young and older generations. But Harmit, I want to ask about tariffs. So Levi expects tariffs from China about 30%, but increased expectations to 20% from the rest of the world. Where are you sourcing your jeans materials? Are you more exposed to that doubling in terms of, are you getting materials from Vietnam in place of China?
Yeah, so overall, we're taking a holistic approach as we are able to offset the tariff impact. As you think about this year, we raised guidance in the top line and the bottom line and gross margin. So, we've been able to withstand that. To your specific question, Bailey, we source about 1% we import into the U.S. from China, a little over 1% from India. And Vietnam is in the mid to high single digits. So most of our imports are from the Southeast Asian countries. Think Bangladesh, think Pakistan, and the rest of Asia. The way we think about our supply chain, it's fairly well diversified. We import from about 20 countries into the U.S. 60% of our business is outside the U.S. And so we're well positioned to mitigate and offset tariffs. And the way we're thinking about the holistic approach, given that volume is driving a big piece of our revenue momentum, and we have tenured vendor relationships. We're working with our vendors. We're looking at different cost efficiencies across our organization, as well as being very thoughtful about pricing.
So let me just ask you, though, you guys did, you mentioned you raised your full year outlook. You did warn that tariffs are starting to bite. Profitability to measure by gross margins improve. So these are like good stuff, but again, that tariffs are starting to bite. Harmit, can you tell us what that means? What the bite of tariffs? When, how much? Any color around that?
Sure. So, overall, we were able to raise top line and bottom line guidance despite absorbing tariffs. And so we are able to mitigate it. To the question about tariffs, tariffs were introduced on Liberation Day. We normally buy our products, 6 months in advance. And so, we are working through, our efforts, and we've got different levers to kind of position it. So you take quarter three, the quarter we just reported, gross margins are record. So we're able to offset tariffs because we got other things working for us. As we grow our women's business, our direct-to-consumer business, and international, all of which are accretive to gross margins and allow us to mitigate and offset some of the tariff exposure. Quarter four, we did guide gross margins to be slightly down versus a year ago. And had it not been for tariffs, we would have grown gross margins. But overall, as we think about the year, we'll report, again, another year of record gross margins. So we're working on levers for 2026. The good news is we'll end the year stronger, and we believe we're well positioned to have another strong year in 2026.
And Carol, we've talked with a good friend, Peter Atwater, for quite some time about that K-shaped recovery, where people who are well off are doing much better than those really in the bottom quintile. Harmit, when you look at your goods, when you look at the ability to raise prices from the impact of tariffs, which products are you able to more easily raise prices where you aren't going to see consumers push away? And how are you thinking about that strategy as it relates to, say, the jeans that you do sell through a Walmart where you don't have that gross margin going direct to consumer, and you do have likely, at least when we look at the data, a consumer who's feeling the pinch of inflation, broadly speaking?
Yeah, and so the first thing, Bailey, to your question, is our products are well segmented depending on the income profile of different consumers. I talk blue tab, red tab, and signature. Signature is what's sold into the lower income consumer. We've been very thoughtful about pricing. We're leading with product innovation rather than price. And so we're doing what we can to maintain a price point. It was evident in Q3. Signature, for example, I think is up in the low double digits for the year. As we think about our other products, the good news for us is our product pipeline has never been stronger. We're leading with loose and baggy while at the same time selling a lot of slim and skinny, both for him and her. We've got wonderful, waist up products. Think trucker jackets, think linen shirts, et cetera, et cetera. And so as a company, we're making this pivot to be more of a denim lifestyle retailer going forward. Our past was all about denim. Our future is going to be about denim lifestyle.
I just want to know, do you really have a pair of baggy barrel jeans? I can't get my head around them. I'm trying. I haven't done it. Harmit, what I do want to ask you too is you guys have had kind of a mission, a goal to get to 10 billion in sales by 2027. I think you may have adjusted a little bit. I think also a 15% EBIT margin. Could you reach 15% in the next few years, even if sales have not hit that 10 billion? Talk to us a little bit about that mission.
Yeah, no, we gave out the expectation of 10 billion and 15% on our investor day in the middle of June 2022. Since then, there's been a lot of change and a lot of uncertainty. As a company, we have kind of navigated our way through uncertainty. We haven't given a new date on the 10 billion and the 15%. Mm-hmm. Our thinking is we'll probably do that sometime next year. But to your question, the company that we are building and the company that has got the foundation given where we're ending this year. So you take 2025, we'll end at about 6% organic growth. Last year it was 3%. The year before that it was flat. If you think in EBIT margins, this year we'll end about mid-11s. Mm-hmm. Last year it was in the mid-10s. The previous year it was about 9. So we've seen a steady progress. And our view is we probably get to the 15% faster than we get to the 10 billion. Uh-huh. But really a company that is steadily delivering mid-single-digit growth in a category that probably grows a little, south of that. So our view is that we are market leaders now in the U.S., #1 in men's, #1 in women's, and really resonating with the youth. And so the question is, if you're able to stay at, and implement our strategies, our view is we can continue to be market leader and probably pick up a little bit of share, especially because the denim category is accelerating. We've seen the acceleration in the U.S., we've seen the acceleration outside, and that's largely driven by the world becoming more casual.
Yeah, I have more jeans in my wardrobe than I've ever had since high school. It's really kind of wild. Anyway, Bailey, I know you've got another question.
Well, I was just going to ask, in terms of geographic expansion, when you think about China, what's going on with China, and also what products do the Chinese consumers want? Is it that high-end good, or is it more of a bargain purchase?
Yeah, so China for us is still underpenetrated. China represents about 2 or 3% of our business. Our business in China has been slow and soft. The Chinese consumer right now is going through a bit of a macro uncertain climate. But the good news for us is they love the brand. Our brand equity scores are really solid. We think China can be, a business that grows double-digit over the long term. But to your specific question, the Chinese consumer is fairly discerning on the brands he or she gravitate to. There is a high-end consumer, as well as a consumer, the mid-market consumer, what we call the core products. So if you think about our Asia strategy, we really, our products are relevant for the mid-market consumer, while we also offer products for the higher premium end consumer. 30% of the Asian denim category is premium, and premium, for example, our highest pinnacle product is largely Japanese, fabric, Japanese denim, and inspired by selvage. And so that's what we are selling. And I think over time, we'll be able to start growing our China business back in the low double-digit range.
Yeah, interesting stuff. I will say, Carol, I know you mentioned you have more jeans than ever.
Do.
I have been buying the Sherpa jackets, the denim jackets, like crazy. I don't know why. I have 3 of them in different colors.
I bought a bunch of denim jackets
that's
too.
what I'm in. I don't wear jeans. I wear chinos, but I wear the denim jackets like crazy.
I know. I don't know. I love it. I love it. Yeah, it's like everybody I work. I walk in with jeans every morning.
Yeah, and Bailey and Carol. Now we've got the blue tab. It's a fuller jacket. You can definitely wear it to office, depending on the dress environment at Bloomberg. I walked in here fairly casual, so it's something that we are now beginning to offer, which should make your wardrobe at some stage.
Hey, one last question. Does it feel like, God, Harmit, it's been a crazy year? And a lot of stuff coming at everybody, investors, the world at large. Does it feel like things are starting to calm down on a day when we've talked about what seems like progress in a ceasefire between Israel and Hamas?
Yeah, as I mentioned earlier, we have lived through uncertainty. The good news for us is the category is strong. We have real business momentum. The brand's never been stronger, and we have a product pipeline that is never been fuller, especially as we head towards holiday. Our focus right now is making sure our product is on the floor. Because what we have seen, Carol, is consumers gravitate to newness and gravitate to what's relevant. And our view is if we can offer the right product and build a brand experience, and that's where we've got real focus on our direct-to-consumer business while complementing growth with our wholesale business. So this quarter, both DTC and wholesale was up.
Yeah.
We had, in the U.S., 5 consecutive quarters of high growth, and it's fueled by both the channels.
All right, well, Harmit, when you talk with your design team, I like high waist buttons, kind of slim through the legs, and then a little flare. I'm just going to put it out there, a little stretch in there too. It's kind of my favorite.
And
you are a gem. Thank you.
Yeah, and I'll take that feedback, Karen. I sincerely believe feedback is a gift, and getting feedback from consumers like yourself is something that I'll take upon myself to feedback to our designers.
All right, I'm going to hold you to it. All right, good stuff. Harmit, thank you so much. Harmit Singh, Chief Financial and Growth Officer over at Levi Strauss, joining us from our bureau in San Francisco. All right, folks, just a quick check on the markets. Bailey, we are just rolling off our highs of the session, but we've got a rally underway.
We're still well in the green, up more than 1% on the S&P 500, led by none other than the chip stocks. So thank you, OpenAI.
Yeah, exactly, right?
Yeah.
We're seeing the chip stocks rally in a big way. And you've got, the Dow up about 1% and the NASDAQ 100 a gain of about 2%.
We'll take it after the pain that we saw on Friday.
Yeah, some broader-based buying, certainly in the S&P 500. I'm Carol Massar, along with Bailey Lipschultz. Let's take a look at some individual stocks on the move on this Monday. With us is Bloomberg News equities reporter Alexandra Semenova. Alex, we're going to go to the name that everybody seems to be talking about.
Yeah, well, Broadcom, guys, as you mentioned, that sell-off that we got on Friday, basically old news today, and artificial intelligence enthusiasm is back in full force. Broadcom is up about 10% right now. This is after OpenAI agreed to buy the company's custom chips and networking equipment in a multi-year deal. This is part of a bigger plan by the startup to add AI infrastructure. OpenAI will design the hardware and work with Broadcom to develop this gear. And one of the goals by OpenAI is that it'll take what it's learned so far about AI and develop it very directly. They said that we want to take it directly to the hardware, unlocking new levels of compatibility and intelligence. The hardware rollout should be completed by the end of 2029. But the interesting part here, of course, is that there's no clear details on how OpenAI will be paying for this, which has been a theme very clearly.
Heard this before.
Yeah, fun stuff there, though, Alex. What's going on with Keurig Dr. Pepper, another stock in the green?
Yeah, we just got some news earlier, a report from the Financial Times that Starboard Value had to build a stake in the beverage company. Apparently, they had started building their stake right around when Keurig announced it would buy JDE Peet, the Dutch company that owns Peet's Coffee. The deal has been really unpopular among investors. Shares of Keurig Dr. Pepper had fallen about 26% since that deal was announced in August. So it looks like Starboard is trying to kind of restore investor confidence here without making too much of a fuss about it.
All right, ticker's KDP. Just real quickly, JPM on the move. I love this story. Just got about 15, 20 seconds.
Shelling out $1.5 trillion into industries that bolster U.S. economic security and resiliency. And a really interesting comment from Jamie Dimon here. He says that we can't rely on other countries for our own national securities, and we need to act now.
All right, the full story on the Bloomberg. Alex Semenova. Check out our Stock Movers podcast, 5-minute episodes. Find it on Apple, Spotify, or anywhere you get your podcast. If you're watching on TV, the close is coming your way. Bailey and I continue on Bloomberg Businessweek Daily.